Today, we are going to review hybrid finance. Hybrid finance recently emerged in the DeFi space as an investment bank of DeFi. They look to offer investors exposure to a number of opportunities. Some of those opportunities include bot training, farms, and mining, where they, in essence, act as a investment fund to manage those investments for you. So you simply deposit your funds and they maintain their portfolio with a continually upwards moving fund. They have a concept of an infinity pool. This is the fund that backs their token, which will only ever increase in value. The way they've accomplished this is they have a token which represents your portion of that pool. And as the investments do well in a separate treasury fund, those profits or those revenues or yields get deposited into this infinity pool. Thus, the token continually increases and benefits from that. And we'll get into some of the tokenomics a little bit further, but their general benefit is over some of the other degen and DeFi projects out there is that they're not traded on the public market. You can buy and sell their token on their website, on their dApp, but any type of kind of buy and sell pressure is not applicable here. Again, they're looking to be primarily an investment firm, creating a portfolio of various investments. And before we get into some of those details, just a disclaimer, we are not financial advisors. Any content on this video or on our website are merely for education purposes. As with everything, we suggest that you do your own research and seek the advice of a financial advisor for anything you're looking to or considering investing in. And as with all projects, and especially in the DeFi space, there's a certain amount of risk involved and there's no guarantee of success. So please do proceed with caution. Okay, the team has two main founders and owners of the project. McRoy, who has a background in TradFi, is primarily involved in product design and investments. Kilmac, also known as Xerox Solo, has a background in governments, DAO, and general management, and is involved in business development, also investments. So those are the two key members of the team. They do have an active Discord community where they have voting proposals and things of that nature, but by and large, the majority of the decisions are made by these two individuals. Looking at a history of hybrid finance, in March of 2022, Hybrid launched their first version of their dApp, V1. And at that time, it was a rebasing token offering quite large APYs or proposed APYs of 50,000%. And they accomplished that through things like weekly buybacks, or they claimed to do so. That project did not do well, and they ended up stopping that project. And then they sort of reinvented themselves in September of 2022, launching Hybrid V2. Now, this is not a rebasing token or kind of following the previous tokenomics. The current project, as mentioned earlier, is much more of an investment fund. So in essence, you deposit funds into their platform. A certain percentage gets taxed and sent to their treasury. Those treasury funds get invested in various projects of varying degrees of risk and success, such as bot trading, farming, mining, and then the yields from those projects end up getting put into the token's value in essence, and that value will increase over time. So that's their current model. Definitely feels much more stable and sustainable than Hybrid V1. So we'll go into some of the tokenomics and details in a moment. And then recently in November of 2022, they started providing a feature to lock tokens. Now, if you lock tokens, you have the opportunity to make a higher yield. So a certain portion of the yield will go to anybody that has locked their tokens. But also with that comes a greater risk. So you're exposed more to the volatility of those investments. Whereas the non-locked tokens, continual upward growth kind of mentality, but kind of slow and steady growth. The locked has again more of risk of losing funds, risk uh, of not actually making profitability, but also has greater potential rewards. So you can decide upon what is your tolerance to that risk and move from there. Okay, so let's dig a little bit into the tokenomics. So when you buy a token on hybrid finance, 15% is charged for a buy tax. 10% of that, as mentioned before, goes to the Treasury, and that again funds other projects that produce yields to increase the value of your token. 5% goes to the community, so a certain percentage kind of gets spread across the community. So if I, hold a token and somebody else buys a token after me, I in essence get a percentage of their investment, the amount they sacrificed. And then 85% goes to the holder in essence. That's the amount that is used to determine the number of tokens they get. So that's the general kind of buy tax. A key point here is there is no sell tax. So when you sell, basically your relational, proportional claim to the infinity pool is then returned to you, or you can withdraw that amount with no additional tax on top of it. And the team is pretty clear about encouraging members to withdraw and realize those those yields, those profits, whatever you want to call them, just so that you're not continually putting yourself at risk. Um, and then there is a general 20% performance fee. So this performance fee comes out of the treasury gains. So that's an important note. Like if you deposit, say, 100 USDC, they're not taking anything from that. They're only taking a certain portion outside of the treasury gains. So that really makes it so that the team is vested in the success of the project because if the treasury is not doing well, they're not making any money. So that's what their fee is at the moment. Okay, so let's take a look at how their infinity pool works. So again, this is their documentation. You can access it, from their website. There's a couple of options towards the bottom, or the kind of docs up here. So within their infinity pool, um, as of today, but this is changing. 90% is in USDC or USD plus, 10% in USDC. As I mentioned, because they did have some issues with USD plus, I think they're migrating USDC. Um, and so here are the mechanics. So basically, when you add additional funds, there's a certain amount of value that you add. So if you take that plus the previous value, so say if you added 100 USDC and previously there was 100, that would be 200 there. And then how many ever tokens you mint, which again, you're getting 85% um, of based on the old price, plus the number of previous tokens. Take those two amounts, divide it by each other, and you get the new price. So that's how they continually kind of up this price. So whenever value is added in here, that doesn't bring the price down because again you're kind of proportionally adding funds, and actually whenever new investments are created, because a certain percentage goes to the community, this new price will always go up whenever new value is added. Similarly, for sell transactions, selling has a zero effect on the overall price. So in essence, the previous value that was in the infinity pool minus the value withdrawn. So you take that amount divided by the token supply minus how many tokens were burned from that sell, and that's what you get to the new price. So that's all just a kind of fancy way of saying that the infinity pool equals the price of the token times the supply, which seems pretty straightforward, but this is not the case in traditional markets. If you traditionally have a token and you try to buy or sell it on a market, the price of that token is based on the seller, right? So if right now with Bitcoin, if nobody wants to buy it, that Bitcoin is not worth thousands of dollars. It is now worth $0 because there is no liquidity in the market. There is no you know individuals willing to buy it, so there's no buying pressure. Uh, with hybrid finance, there always is going to be a almost like artificial um, buying pressure because you can always buy your token back from or sorry, get your funds back, sell your token from the platform. So, what kind of investments do they do? Currently, uh, they have a number of funds in overnight. And if anybody's familiar with overnight, they in essence take USDC and continually grow it. And the same kind of tokenomics, I guess, or metrics as a hybrid finance, and that USD plus will only ever grow. And the way they're doing it on overnight is through a number of mechanisms, but the primary is through like a liquidity pool. Um, so the team, it looks like on hybrid finance, is migrating away from USD Plus because recently it was hacked, and that migration is happening as we speak. I'll probably provide an update video later on to talk about that a bit more. Um, they also do bot trading, so their bots have been gaining, roughly 10% return on average. A number of their tokens, or sorry, their trading efforts were in FTX, and with some of the recent issues FTX is running through their insolvency, a good portion of their treasury is locked up in FTX, and there's a good chance it may never become unlocked. It may just disappear. So they are migrating over from FTX, but still continuing on with bot trading because that has been successful. Um, they're doing kind of traditional farming, so they're using primarily ETH, Matic, BNB, and they're doing that via Beefy, Pancake, Balancer, Venus, and Curve. And then in addition to farming, they're doing mining. So they're using a third party called Fraction Mining Farm to mine tokens. They have a active community. So if you're interested in learning more about their project, you can go over to the Discord, or you can tune into some of their AMAs. They do post those on YouTube, and I have the link here, and all these links will be in the description as well. Okay, let's take a look at their dApp to find out how some of this functionality works. So when you log on to the Hybrid Finance website, there is a dashboard button in the upper right. If you click on that, you are brought to their dashboard. One thing to note is that they are in the Avalanche network. So make sure to switch, whatever type of wallet you're using over to that network to be able to connect. Um, and so the first thing I notice is their treasury. So they're very transparent about where their treasury funds are located. So right now it shows they have about 60K in their treasury, and it's split across a number of chains. So 14K in AVAX, 19K in a Gnosis safe, 8K in BSC, 12K in Polygon, 5K in Optimism. So this will update, as they kind of move funds around. And so that's an important kind of transparency aspect. They are using, looks like a third-party tool called Multifarm to get some of those metrics and whatnot. You can also see the history, the 30-day history of their treasury. So you see that they, had about 83K in November, jumped up um, when they gained some additional funds. Then, as mentioned, with the FTX kind of collapse and the overnight hack, it looks like some of their funds decreased, and now they're roughly around at 60K. Um, and you can verify some of this. We'll talk about some of that later in the video. But this is a good kind of one-stop shop to see why or how their treasury is looking at any given time. Okay. There also is a dashboard. So the dashboard will show the current price, the infinity pool value, so how much is overall, in that pool, and then the number of token holders, and then the treasury value. So they're in the process of migrating from one infinity pool to another, migrating their contract. So that's why this shows zero, but really it's around $1.05 per token, and that has kind of changed over time. You can see here it was at $1.04 in early November, and then December 1st $1.05. So again, this is another spot where we can spot check and find out how their tokens are doing. And again, this will only ever increase. This decrease is really just because they're migrating between contracts. Then when you want to go ahead and invest in their project, they accept either USDC or USD plus. It's unclear at the moment if they're going to stop accepting USD plus entirely. We'll take a look at their contracts and validate that in a moment. But you can say if you choose USDC, you can enter the amount that you want to put in there. It'll tell you normally how much HFI, which is their token, you'll receive. And then there's a tax, and then your final deposit, and you can deposit that. If you want to learn more, you can kind of see how their fees get distributed. This is what we spoke about earlier. There's a 15% deposit fee, 10 goes to Treasury, 10 goes to the overall community. Once you've deposited, you can choose to lock or unlock funds. So depositing funds, based on their Treasury performance, will continue to grow. Now it may stay stagnant for a couple of months if their Treasury is not successful, but by and large, it can only go up. Again, unless there's a black swan event, a hack, something along those lines. If you want to get more exposure and as a result more risk, you can lock your tokens in either a 3, 6, or 12-month period, and then your gains, so to speak, will be multiplied by a certain amount. They recently opened up a 12-month locking period by using that mining protocol. So you can kind of get exposure to that if you like. As far as I understand, the 3 and 6 month lock are still not currently open. And then they have certain periods when you can lock and unlock. So that right now the period's closed. But as they have more projects, they'll kind of open up those periods. And then once that period is done, you can flip over here to unlock, and you can choose to unlock your tokens. And again, there's some more details here to learn more about that and how they kind of do the ratio between their VFI and their HFI. So VE HFI is the locked token, and HFI is the unlocked one. And then finally, if you want to withdraw, you can take how much HFI you have, how much ever you want to withdraw, and then it will tell you the amount. Again, they're in the process of migrating, so it doesn't show me the total, but you can withdraw from there. And as you know, there's no selfie, so that was what I mentioned earlier. And then finally, you can take a look at your own investments. So you can see how many tokens you have and how much they're worth in USDC. Your ROI, both from a dollar amount and a percentage, how much you have locked, how many tokens, when they'll be unlocked, and it kind of talks about the period. So if you had multiple kind of locking periods, it would break these out into separate ones. So that speaks a little bit to the investment and the kind of dashboard. So let's jump. All right, so now we're going to take a look at some of their code and contracts that are available. You can skip over this part if you're not as technically savvy, but I will try to go over this as plain English as possible, so you don't have to have a technical background. So there are a couple of tokens. So first and foremost, there's the infinity pool. This this contract is the one that you interact with when you buy and sell your token. Okay, this is one you directly interact with. There's a token contract, which is what the infinity pool interacts with when it's trying to mint, so create brand new tokens, or burn, destroy existing tokens. So the token is kind of like the bank that's kind of giving you money, and you can kind of burn, so kind of destroy those funds, or you can kind of create those tokens. But the infinity pool is the primary thing that's interacting with it. Nobody else interacts with this token directly per se. And then there's a locker contract, and that's what you do to lock. So again, that 3, 6, 12 month, the locker is what does that functionality. The Treasury is not an official contract. In essence, it's a wallet. I say that kind of with pause because the Treasury is using a Gnosis safe, which is a wallet that allows for multi-signature. So I'll talk about that more. But this is important because you can verify what funds are in the Treasury. As I mentioned before, there is an integration with multi-farm. It's just getting some of the metrics for the dashboards. And then there was an audit by Cyberscope, which we'll take a look at further. So without further ado, let's take a look at some of those contracts. Okay, so this is the hybrid V2 contract. The first thing you'll notice is it is ownable. So you can take the property of the owner, which can be transferred between different addresses. So different people or different, in essence, wallets can own this particular contract, and they can do things with it, which we'll talk about, further along. Um, the uh, the top, you can see that when this constructor is what happens when the contract first gets created. They pass in a name, so the name is HFI. They pass in a treasury. So it looks like when they first created this contract, the treasury got an initial supply of, in essence, 100,000 tokens. And so that was minted or created at the time of creation, right? So that's what that is all about. So minting, again, minting is the process of creating tokens. And by the way, if you're curious about, what some of these terms mean or want to dig more into Solidity, the programming language, in essence, that is used to create these contracts, we plan to have some videos in the future. So put some mentions in the comments if you're interested in learning more about those kind of things. Um, so in order to mint or create a brand new token, there are some safeguards in place. So over here, it says that only a minter can do this. So what does it mean to be a minter? Well, if this only minter has a check where it says that the sender, so the person making the request, has to be a minter. Otherwise, it throws this error. So if I try to call this contract directly, I will get an error because it'll say that, hey, I'm not the minter, right? And so that will fail. And by the way, you can take a look at these tokens at any given time. If you go onto Snowtrace, which is Avalanche's tool to kind of browse contracts and transactions and things like that, um, you will notice that this is the contract for the locker. And let me just grab the hybrid token. You can actually interact with a contract, and we'll speak about this a little bit later. But for example, if I wanted to, kind of mint, I can actually call this write contract, connect my, my MetaMask, and I could try to mint with this. So I am not connected to MetaMask in this browser window, but I am here. So if I go over to Hybrid V2, try to write contract, and say if I want to mint, it's going to pick a receiver address. I want to give this person 100 tokens, and I hit write. It should, oh, I'm not connected. Okay, it's not properly connected, it seems. There we go. So I'm trying to mint at the moment. So we're just testing to see. Usually when you get an error like this in MetaMask, that's generally a sign that something's not going to go right. But if I confirm, I don't know if I have enough gas here. It's going to fail in a second. So it's queued right now. Oh, and you see it failed, and it failed to go ahead and do that. And so there will be kind of details in there about why it failed. See if we can find those details out here. We can't decode it with this chain, so it's not gonna be able to show that. But if I were to get the information back, it would say not minter. That's why it failed. I actually might not have gas there either. Double check that. No, I have some. Okay, so that's why it failed. But that's a safeguard. You want that in place. The problem is, somebody can mint. So this minter right here, you can also grab that address. So if I go back here and I want to read the contract this time, I go to minter, this address right here, this 20D, which is their actual treasury, can actually mint. So one thing you want to check with this kind of thing is this is using a Gnosis safe, which generally uses multi-sig. So we know that they can't just like mint. Say if one of their owners wants to go off the rails and mint a whole bunch, and then run with the money, they can't if they have a multi-sig set up there. You can kind of see their contract here a little bit more. This is a standard Gnosis contract, so I won't necessarily go over the details here, and they haven't validated it. So um, anyway, so we'll leave that as is for now, but just be aware that that's what's in place. And so, setting the minter, only the owner can set that minter. So if we go back here to the original contract, we go to the owner. So the owner and the minter are the same. So if somebody wants to change who the minter is, only this address can do so, because that has a similar check called only owner. And you notice in here that there's not a method for only owner. That's because this is part of the ownable contract, which I don't have pulled down locally here. But if you look at the contract over here, the code, there should be an ownable here. And then this is another contract that I pulled in, a dependency, if you will. And it's doing the same type check for an owner. So I didn't include that here because that's not their contract. They're pulling in these third parties, in essence, open source contracts to go ahead and make their development lives a bit easier. Okay, so that's setting the minter and minting. Burning, so anybody can burn their own tokens. There is no check here for security. And so when you burn, basically the person making the request is burning their own amount here. And so that happens there. Or you can burn somebody else's tokens. So if I want to burn this other account for this amount, first of all, only the minter can do this, right? And then it's going to go ahead and burn using one of the built-in Ethereum kind of the ERC20 methods, which will check and make sure that the sender, not the sender, so the owner, the account has authorized that burn. That's kind of what this approve method will do. So if you've ever been into that space where you have to approve from your dashboard, so if I go to invest here, I put a certain amount here, and I hit deposit, I think it's, I'm sorry, up here, and I put that in there. You see how it's saying approving, and then the approval happen over on this screen, right? You're kind of giving permission, and it'll show it's encrypted, or it's down here. But you're basically approving a certain amount. That's what happens over here when you try to burn. It's saying, hey, has this person approved that this burn can happen? So you can't just kind of burn random people's accounts, and you also can't do it above the amount they put, otherwise you're gonna error. So that's it pretty much for this contract. It looks like a pretty standard token. You can do some minting function, you can do some burns. There are safeguards in place. The main thing to be worried about here or to be concerned about is that somebody can mint. It's a little bit mitigated by the fact that the minter is part of a multi-signature, so it's a little bit safe. But again, these are one of those things where if both of the owners decided, hey, we want to mint a whole bunch of tokens and drain the account, they could do so, and nobody's really going to stop them. So you really want to trust the people making these decisions, and trust that they, in this case, the two owners will not kind of pair up and create malicious attacks and whatnot. All right, so that's it for the token. All right, so next up, we're going to look at the infinity pool. So as you notice, there are two different contracts I have here because they recently migrated from one infinity pool to another after the USD Plus hack. And so we're going to take a look and see how they're doing it. But in essence, they removed references to USD Plus. So previously, there's this USDP kind of variable that they were doing swaps and stuff. The new contract is a little bit more streamlined and simplified. So without further ado, let's take a look at what they're doing with this contract. So just like the main contract, it is ownable, which means an owner can do actions on it. It's pausable, so certain functions can be paused or unpaused. And then they have a standard re-entrancy guard, which basically says that you can't call the same method twice while it's processing the same action twice. So again, that's pretty standard. Pausable, we'll take a look at what that means. And ownable, we spoke about before. These are a bunch of events that the contract can emit. So whenever one of these actions happens, you can actually listen to those events and see them happening. So we'll talk about that, and other concepts, maybe deep dives on how Solidity works. So the constructor, again, is a space that's called when the contract first gets kind of deployed and initialized. It makes sure that the hybrid v2 address, which is their token, is not 0. Same with USDC. So they're using these two addresses on the blockchain to know how to transfer or exchange between those contracts. Their Treasury address is getting passed into. They're creating the contract, creating the metadata, which they have a custom kind of interface for. Then they're setting variables. So where does the USDC live and where does hybrid live? So this is set this way in case, like, for example, they have a hybrid, a new version of the contract, they can change it, so to speak. And let's see, let's take a look at some of their functions. So first up, we have some admin functions. So setting the treasury, they're setting it to a certain address, and only the owner can do this. So if we pull up the infinity pool, is this V2? No. Let's grab the V2 infinity pool. And I'll post all of these links in the description in case you're ever curious what they look like. So over here, again, the owner is this 02D or 20D. And that's again that Gnosis safe. So the same one that owned the hybrid token owns the infinity pool. Just while we're here, you can see it's not paused. You can see their treasury address, which is actually the same. I might recommend that the treasury account and the owner address are two separate ones, just because if somebody accesses your treasury, you as an owner can kind of pause stuff in your contract, and then sure, the treasury funds are kind of lost at that point, but your contract's not hacked. So general rule of thumb is to try to create separate addresses where possible for those. And then USDC, this is the standard USDC on AVAX. So you can see this is pulling that contract USDC. So that looks good. They're not sending it off to a fake coin. Hybrid V2, this is the DE7, which is what we saw before, the DE7, so that looks good. You can get the price. So this is the new contract, so the price is right here. And then you can get the total value, which is right here. And we'll look at those in a moment to find out what that means and how to interpret that. So an owner can set the treasury. So if they want to set the treasury to a new address, they're using a new wallet, they want to change it, the owner can do that here. So that's all that's doing. This generally is a red flag. So an admin can withdraw from this pool. So you're hoping that the owner can be, is trustworthy. Only the owner can do it. But basically, what happens is here, the owner can say, here, whatever token we want, whether the token is, USDC or the token is hybrid, as long as the balance is, okay, then they can actually transfer it to themselves. So if somebody got access to the owner wallet, they can drain the account. I'd almost recommend not having this and having things locked up in a contract. And so you might say, well, what happens if the tokens are locked in the contract forever? Well, you can redeploy the contract and kind of add functionality, but I would never want to create like an attack surface like this off the bat. So one suggestion here might be to remove admin withdrawal. I understand why people do it. It allows you to withdraw the funds, but that also creates potential for risk. So that's over there. pause and unpause functions. So we'll talk about those a little bit later, but they're pretty self-explanatory. You can pause certain things. Okay. Getting the price. So if you want to find the price of, I'm assuming the token, the hybrid V2, what they're doing is they're saying get the total value, which is basically the balance of this contract with USDC. So if I jump back over here and I jump into the infinity pool and I see, okay, USDC has about $10,000 in it. Okay. So it's going to say the total value is 10,000 USDC. We have to make sure that the value is greater than zero, otherwise it's not being used. That's just a safe check. The total supply of the token. So again, this was for over here. We looked at what is the total supply, which is the built-in function. It's in this ERC20, but basically it says the number of tokens that are being used or issued. So if I read here and I go to total supply, there's a whole bunch of tokens there. Then basically what it does, so V2, is it says take the value, which is the 10,000, divide it by the token supply, which is over here. One kind of word to note, depending on how many decimals they're using, this is generally it's 18 decimals. Let me see what they're using. Yeah, they're using 18 here. So if you go over here, okay, so right now in hybrid, V2, their supply is about 36,000. And then they have the balance in the new infinity pool has, sorry, this is not the new one. It is V2. This is their total value and this is their total price. So that's kind of how they're doing, the math there. Basically, the price of the token is total value, so how much ever is in their account, divided by the number of tokens. And that's their price per token. Total value is just straight up how much USDC they have in their account. Okay, so those are more like helper functions, things that get you information that you need. Right. So next up are the buy and sell, and these are probably the most important parts of the token, or of the contract rather. So this only runs when it's not paused. So if somebody went over to the infinity pool as an owner, mind you, and they go to write contract and they call pause, that will stop the thing from processing. So you try to run this and it'll say, hey, it's paused, we can't do anything. It makes sure that you can only buy USDC. So in their previous buy function, you could buy USDC or USD plus. So now they're switching just to USDC. The amount has to be greater than zero that you're buying. Very self-explanatory. You have to have that certain amount in your account. Otherwise, it says you have insufficient balance. It gets the price, which was up above here. The token amount is basically their amount times 85%, because again, 15% is going for taxes, divided by the total price, which is over here. And that's the amount of tokens that you're getting back as a user. The Treasury gets the USDC amount divided by 10, so 10%. And then the pool, that other 5%, you could also kind of divide by 10, divide by 2. Or you could just take the remaining USD amount minus the Treasury amount. Okay. To get the pool amount. So this is the 5% that goes to the overall community plus the 85% that goes to the user, because those funds are kind of together in one pool. Then they basically transfer from the sender to the treasury, that 10%, the treasury amount. Then they transfer from the sender to this address, the infinity pool, the pool amount. And then they mint to the sender the token amount, which again was based off of that 85%. And then they just emit this event that says, hey, somebody bought something, right? This is who bought it. This is the token they use to buy it. This is the price, the amount, the token amount. So that's just informational purposes. But if you go to the contract, like in the infinity pool, and you look at the transactions, um, I don't think there's going to be any transactions here yet. But if we look at the old infinity pool, again, they are kind of migrating over between pools. So that's still B2. Let me get the original infinity pool to show you what the events look like. So here, there's a bunch of buy and sells, so you can take a look at those transactions. Um, and then those transactions are paired with events, so people are selling in this case and buying. All this stuff is going to be kind of encrypted, so to speak, or encoded. So we'll have a separate video to talk about how to view that information in kind of plain text. But you can kind of see the history here, and that's what gets populated with these bought events. Okay. Now, similarly, the sell event or the sell action happens. You say it can only happen when it's not paused. You say how much you want to sell for the token amount. You don't pass in the token because they assume that you're selling the hybrid hi-fi token. Token amount has to be above zero. The person making this request has to have more than the amount they're asking to sell. Again, we get the price. The USDC amount is the token amount. So 100 tokens times the price, like $1.05, and that's the amount that they get. They burn those tokens. So those tokens are no longer in existence, and then they transfer the USD amount. This is USDC um, to the sender, and then they emit a sold event. Okay, so kind of pretty basic, buy and sell type functions. Distribute. Um, so this, I don't know. I haven't seen where this is used in the application yet, distributed and released. But let's just take a look at what it's doing here. So it's getting the price of the token, getting the token amount, and then they're transferring from the sender to this address for the USD amount. Okay. And then they are minting to the locker the token amount. So this is almost like you're distributing stuff directly to being locked onto the locker address, which I guess gets passed in there. Um, Again, I haven't seen this used in the app. I've only seen, or sorry, this is USD amount. Um, okay, so this is just basically transferring the funds over to the locker. So this other contract, which we'll talk about later. Um, okay, so that's how it's locking the funds within the app. So basically, if you go in here and you try to lock and unlock, that's the code that's happening here, and then releasing a lock in the same type vein. Um, so here, making sure you have the token amount, getting the price, token amount times the price, then it's burning the token, transferring to the treasury, so back to the treasury, the USD amount, and then it releases it. Yeah, that's interesting. So they basically split out, the locker from the infinity pool. Um, I've seen contracts that combine the exchange. So in essence, the pool and locker would be one. They might want to have these separate just for kind of management and kind of tracking purposes. But all this code is needed to basically integrate with these two contracts. So that's why you see that there. But that's it for the infinity pool contract. As with all these, contracts, the fact that it's ownable, you want to kind of be sure that like it's using a multi-signature wallet, which it is. That it's pausable, that's always something. So they in essence could lock your funds, right? If somebody pauses this, you can't withdraw anything. So that's also a potential risk, just to watch out for. And then the admin can withdraw funds. That's also kind of a big risk. So these are things to look out for. Just because something's on the blockchain doesn't mean it's safe. You want to make sure you understand the code and you understand the actors involved, the owners involved in this. But that is the infinity pool. Okay, now we're going to take a look at the locker contract. So the locker contract, again, is responsible for locking and unlocking um, to get additional rewards and things of that nature. So let's take a look at this. So just like the other contracts, it's ownable and pausable. They have a number of events that they admit, which we'll talk about later. They're basically mapping a user to some lock info, so the amount and the time that they're locking for. So this information, I think, is showing up on my investments here, right? So how much I've locked in the time, that information is showing up there. Again, they have the contracts or the metadata for hybrid and their VE hybrid. So VE hybrid is their locking token. Addresses of stuff like the infinity pool, unlocking start and duration, things like that. How many tokens were kind of minted, how much treasury was released, and what's the maximum ratio that they'll allow for. Okay, so first up is this unlock period. Okay, so it's basically just setting when the unlock starts. Okay, so it's just basically like, unlocking, and it kind of requires that the timestamp is greater than or equal to the unlock start. So just making sure that it's within a locking period or unlock period. When the contract first starts up, you see that they're kind of setting the hybrid v2 and v hybrid, so the two token addresses along with the infinity pool. The months have to be greater than 0 for how long the locking is happening. There's a certain ratio that they have between locked and unlocked. Grabbing the metadata for those contracts, sending infinity pool to a variable along with the start. The duration is 7 days, which is unlocked to open up this contract. And then the lock duration is how many months times 30 days. And they set the max ratio. So just initializing some variables when it first starts off. All right, first up as usual are some admin functions. So setting the infinity pool. So this is again how it interacts with that other contract. Just setting that address and only the owner can do it. Setting the unlock start. So if you look at the app here, the locking period is not open, right? So this is saying it's not open right now, so I can't call that. Or this is just setting the unlock start. So that's again sets this unlock period. You can only do this stuff it's on the unlock period. Setting the unlock duration, the owner can do that function as well. So how long this thing is unlocked for. Setting the lock duration, very similar. Setting the ratio that they open up. So it kind of looks like they're basically like opening up these periods, these locking, kind of one at a time. So it's a little bit unclear to me with the 3, 6, 12-month kind of functionality. It kind of feels like the contract only does that one at a time. Because I don't see how you could have multiple like unlock and lock durations. Maybe that's by design, but that's just what I see. I might want to suggest cleaning up the UI a little bit to make that a little more clear. But maybe they have future kind of thoughts for that functionality, or maybe I'm misunderstanding the functionality. The ratio, which we'll talk about later. Again, an admin can withdraw from this contract if they wanted to. So the locker contract right now doesn't have anything in it. So that seems to be okay at the moment, I guess. But again, be aware that somebody can withdraw from here. They can pause and unpause it. The current ratio. So what is the ratio between locked and unlocked funds? Maybe they use this on the dashboard somewhere. But basically they're taking the hybrid V2 balance for the locker and dividing it by the total VE minted and kind of getting that ratio between the two. Okay, so this lock helper is internal, so I'm going to skip that for a second until we get the actual lock function, which is next. So locking can only happen during the unlock, only in the unlock period when it's not paused. So they take the user lock, the amount. So they want to make sure that their amount they have is equal to 0, otherwise they've already locked funds. And the amount that they're trying to lock has to be greater than 0. So their treasury amount, basically like it's looking and finding, this amount that they're requesting to lock they're trying to transfer from the sender to this address. So taking their tokens and bringing it to the locker for the amount. They're approving the infinity pool, so over here, to have this amount in it. And then the treasury amount, they're releasing that from the infinity pool. And so they're updating a variable that says how much has been released from that treasury. And then they're minting the VE tokens to the sender and the amount. And the total VE minted, they're updating the variable. So again, this is like how they're kind of transferring between the infinity pool and the locker. I mentioned before that release function in the last segment that was at the very, very bottom up here, release and distribute. That's kind of how these are interacting with each other during the lock and unlock. So basically, it gets the treasury amount, takes the user, and they lock that certain amount for a certain amount of time. Basically, the timestamp plus the duration, which I think in this point in time it's 12 months. And then they emit a lock event. In addition to locking, users can increase their lock amount, which is a little bit different, but it is very similar. So basically, like it takes their info, gets the amount they locked previously, again, determines how much they can pull over. They're getting a new unlock time, where basically it's saying, yeah, it's basically adding, that time. If it hasn't already expired, then they're doing a new locked amount, and they're saying it increased. Um, Kind of might make sense if they wanted to combine these two, like increase lock amount and lock. So even if you had nothing in your account before, you could just increase it. That might make the code a little bit simpler. You don't have to call kind of separate functions, but that's just a code kind of readability suggestion. All right, so then you can unlock your funds again whenever it's in the unlock period. Um, It grabs their info that they had previously locked, make sure that they actually did lock something before, make sure that their locking time is not still running, gets their locked amount, gets the ratio between um, locked and unlocked funds, and then it checks if it's within the max ratio. So this is one thing that's really quite interesting. They have a max ratio here of kind of 1.7x. I don't know if that's currently set. What is the ratio set as? Oh yeah, 1.7. So that's because we're doing the 12-month period here. And if the current ratio is greater than that, then they find some extra amount, you know. They prove it. They release the extra. So they said that you got extra above that amount. Okay. And then the hybrid amount that they get back is basically the V amount times the ratio, the current ratio, not the extra, amount. And then they burn the total VE amount, the locked amount, total V minted is subtracted. So that's how much, is not in V anymore. Then they transfer the hybrid to the user. They delete their lock records, they're not locked anymore, and then they unlock it. So that's how they, in essence, handle the amounts here. That's interesting that they, for the extra, amounts, how they kind of handle that above the max. They, in essence, take the infinity pool and they release it, to go to the treasury. Um, but they don't, the user doesn't get it. So they're kind of capped at a certain amount, which, makes sense. That's what the UI shows. So it's not that they're being inauthentic or anything like that. It's just that that's the amount that they check or they get the max amount, and then a little helper for the next time to get the locks amount. So that's the locker. Again, relatively straightforward. As with all the other contracts, that same thing applies. They have certain owner privileges that you want to kind of be aware of. And then also just have one little thing about there is a max amount that you can get from these contracts. So just kind of be aware of that. All right. Well, I think that was our final contract. So we reviewed the infinity pool. So the contract that's responsible for converting USDC to the hybrid, token. We reviewed the hybrid token itself, and we reviewed the token for locking, the funds. We spoke a little bit about them migrating from the original infinity pool to V2. Um, So those are the contracts. Again, if anybody wants additional information, you can hop onto our Discord server defiantly, or you can pop some messages in the chat. But that's where we're gonna leave the code review for the moment. Okay, so next up after the code reviews, we're gonna take a look at the audit. So if you go to Hybrid's website, um, and go to their main site, can I get back there from here? No, let's just go back over here. At the very bottom, I believe they have an audit option, right? So if you click on that, let's just grab that one again. You can find that they were audited by CoinScope, okay? And you can open their report. CoinScope puts all of their audits into GitHub. So it's kind of neat. You can actually, just as a side note, you can view other projects here and kind of see what their audits look like. But if I go into the hybrid finance, this main kind of document just talks about in general what hybrid does and whatnot, and it talks about what contracts they audited. So we spoke about their V2 token. They have a similar hybrid, so there's a misspelling there. VE hybrid for their lock tokens, the locker, which we just spoke about. There was a bridge to migrate to hybrid V2 from V1. Token swap and infinity. So if you go into the H5 folder, you'll see all their audits. We're really just going to look at the ones that we just looked at the code for. So hybrid V2, the infinity pool, hopefully that is it, the newer one, and then the locker. We're going to leave the rest, not look at it at the moment. Okay, so this is the hybrid token itself. So if we just drill down here, has some very, very basic information, so I'm skipping over that, like file names and whatnot. Okay, so here's some of their findings. Contract owner is able to, stop or pause transactions. So that's a finding. Um, it kind of speaks about this in the inverse, like not able to. Like that's they should not be able to, I think is what they're trying to say there. Um, you can transfer from specific addresses. Um, owner is not able to increase fees more than a reasonable percent. Owner is not able to increase the amount of liquidity taken by a dev wallet. Owner is not able to mint new tokens, which again, they can, so that has a red. Oh, sorry, these all passed. That was the ones that failed. And then owner is not able to burn tokens from a specific wallet. Again, that passed. And owner is not able to blacklist wallets from selling. So let's find out about their failures here. So the owner can mint. So again, I mentioned this before, where a minter can do this task. And so they did acknowledge the finding and they changed over to multi-sign a wallet, but that still has the risk there. So if both the owners want to mint, they can. So that's a find that we just discussed before. Minor thing about Solidity naming conventions, that's just how the code is named. I'm gonna ignore that for now. I don't think that's super important. That's all they really found within the audit there. Let's look at the infinity pool and see what they found in that audit. So one thing to note is these were tested on the testnet. Okay, so it's not the actual contract that necessarily was deployed to prod to their the production version. Just kind of be aware of that. They could have given a false contract. I'm not saying this is what Hybrid did, but a company could push a fake contract out to testnet, get it certified and then say it's the same thing. So just be aware of that when you're reviewing these. And also the dates are important when you're reviewing these. Okay, so we're gonna ignore the source files because that was all straightforward. Okay, so it gives a bit of background about the infinity pool. So this is the older version, it's not V2. I don't know if they have an audit on V2. Let's take a look. I see locker. I don't see infinity pool V2. So that's something maybe you guys can ask in the Discord about that. Talks about the taxes. Talks about the distribution, 10% to Treasury, 90% to infinity pool. They used to have a ratio between USDC and USDB plus. That doesn't apply in the new one. User can exchange their tokens, and there's a balance check. Okay, so what did they pass and fail? Contract owner is not able to stop or pause transactions. So they got the multi-sig, they fixed that. Transferring between addresses, again, multi-sig. Business logic concern we'll take a look at, and solidity naming. Okay, so again, buy and sell can be paused. So that's what we spoke about before. That's always a concern, and as long as you have multi-sig, it's a little bit safer. Admin with the withdrawal. So this is one of the things we spoke about. An admin can drain the contract. They say multi-sig for that. Business logic. So keeps the ratio of logic between 1 to 10. And distribute method follows the same pattern, but does not keep the same ratio. Okay. So they're not really doing this ratio anymore, so it's not really a big point, but they're basically saying that the buy method keeps a ratio, but the distribute method does not. So they said that was not a big concern, and they're not doing that anymore, so I'm not too worried. Naming conventions, not too worried, and that's it. All right, and then finally, let's take a look at the locker contract. Again, done on the testnet, done in 2022 in July. Okay, so you can unlock, an increase, which we saw. There's 2 tokens. Saw that. You can unlock when that period elapses. Rewards are returned in a ratio, which we saw. You can only unlock version 2 if you have the corresponding hybrid V1 token. And then they can increase the lock amount. Okay, so what do they find? Again, the pausable stuff, the token transfer stuff, unlock amount, volatilization, we'll take a look at that, and the naming issues. So again, the pause stuff that we found before, withdrawal, another finding. Okay, unlock, volatilization. So unlock amount is based on a rate. The rate divides the balance in comparison with the minted tokens. If the contract's hybrid V2 balance decreases, the rate will yield less than and the rate will yield less than 1. As a result, the user may take less tokens in relation to the initial lock. So basically, you can lose money on this, which makes sense. They say the unlocked amount can be independent of the contract's balance, but I think they intentionally want that. They didn't respond to this finding, but basically, it's saying that you could have a less than 1-to-1 ratio between hybrid between locked and unlocked. And then naming conventions we don't really care about as much. So that's what was found in the audit. So pretty straightforward. Seemed like it passed. Um, they responded at least to every kind of finding. Uh, yeah, and looks like they posted on Twitter, so they were very transparent about the audit. Cool, and that's about it for the audit. Okay, and finally, we're going to talk about some safeguards and some risks. So it's always important to kind of be aware of what are the issues with a given platform. So risks, as with anything, there can be a mismanagement of funds. And when I say that, that's not just for the team managing the funds, so the 2 owners of this project, but also third parties. So I think hybrid found that out already with overnight being hacked was one mismanagement or a risk, so to speak, and then also putting their funds in FTX, which also was mismanaged by SBF. Those are risks with anything. So you always have to kind of be aware that that could happen. There is a risk of malicious owners. Nothing we've seen thus far can show that, and they do seem to have a loyal community after they've gone from hybrid V1 to V2. So some people are still staying with them. But they could always just say, you know what, forget this. We're going to take all of our money out via the admin withdrawal and disappear. So you have to be kind of aware of that. I think good audits of the contracts, good communication in Discord can address some of those concerns. They are non-developers from what I see, so they have a third party doing all of their development work. That is a potential concern. So if they somehow the third party has access to their contracts, that might be a risk. I don't know what third party they're using. They might want to respond to that, but that is a potential concern. Um, if the third party has access to the public the production contracts, that could be a problem. If they have access to the owner um, address, that could be a problem. But maybe they're transferring the code over to hybrid and hybrid Zoom deployments. I'm not sure. But that's one thing way to mitigate that risk. Um, no insurance that I've heard of. So some projects like Horde, for example, have insurance on BUSD. A hybrid might want to get insurance on their USDC just as a safety. As far as safeguards, the positive things they are doing, multi-signature wallet. So they're using a Gnosis wallet, which has a Gnosis safe, which has multi-signature. So whenever they want to do something, X number of people have to approve that transaction. Multiple owners. If there was just one person running this project, it'd be more risky than two. Right? And so as you increase the number of owners, the safer it gets. Transparent monthly reports. They release reports every month, it seems, that tells about the state of the project. So that's super useful. The token's not traded on the market, so it's important to note that the token is not on a Binance or something like that where people can be pressuring it to buy and sell, either increasing or decreasing the price. It's entirely based on how much is in that account, right? So that's usually good. And then they also are having things on multi-chain Treasury storage. So if you go to their Treasury page, it shows it on a bunch of different places. So if one chain kind of dropped or had problems or whatever, there's some funds of some other chain. So those are the risks and safeguards. There's probably more than just this. So you should always do your own research. But these are some of the things that I found out thus far. Okay, I just wanted to provide some closing thoughts on hybrid. So hybrid seems to be a trustworthy project out there. Um, Again, this is not financial advice. You should do your own research. But everything I've seen, they're doing at least their best to create a solid project for the community. So they're creating a token that only increases. So that is a huge difference to a lot of uh, the kind of FOMO type tokens, the degen stuff that's out there. So that's a big win on their side. Um, they they seem to be really trustworthy and have gone from V1 to V2. So it shows they're definitely in it. They're interested in the space, um, and so there are definitely a lot of positive signs about this project in general. I do have some suggestions. One thing is I think that they should bring their development in-house. I think you can trust your code a bit more when you have developers on staff, whether that's people in the community or whether that's like an actual partner in the project. That might be something to look into. I think that they should incorporate some KYC either for themselves or for the community that might just help with regulation. Not a huge fan of regulation in general, but that will increase trust, as well as doxing themselves if they're interested. So it's something else to kind of look for and increase transparency. And then finally, they do have some community involvement, so they allow community to make decisions on, for example, they voted on the locking period just recently. Maybe extend that, have the community be more involved, have the community be able to sign, transactions with multi-sig, maybe some trusted members or whatnot. Again, the biggest fear with this project is that they could, in theory, run away with the money. There's not much the community can do about that. So anything you can separate the divide between community and owner of a project, I think the better. But overall, I personally have some funds in hybrid. I think it's a solid project, and you know if you research it and you feel like that you have come to the same conclusion as me, then by all means join their Discord, ask questions, get involved, and see where it can take you.